Great. So good evening. Thank you guys so much for joining into Tax Clinic 2017. I made this concept. It was going to be a live event here in Atlanta. That's where I live, but I got so many requests to do a webinar or to live stream the tax clinic. So I decided to do a webinar for those of you who do not live in Atlanta or who could not make it that day. So I hope you guys come prepared for questions, and hopefully I provide a lot of value, information, and content for you that you can use and prepare for tax season. I have a lot of slides. Hopefully we get through them all. And if you guys have questions, I would ask that you save them to the end. I do want to make this kind of interactive, but it'll be hard for me to cover all the content and do questions. So there definitely is a question and answer period at the end. If you want to type them into the question box in the chat box as you think of them, that's great. And we'll go through them at the end of the webinar. Okay, so let's get started. So I labeled this theme, if you stay ready, you never have to get ready. And it's so true when it comes to tax preparation, because you see a lot of business owners just scrambling at the end of the year, making sure they have everything together. I've had businesses come to me with shoebox and garbage bags of receipts. And I just want to help entrepreneurs stay prepared during the year, kind of know what they need to do for their tax season so they can be ready. So let me know if you can see my screen. Right here, we're on the agenda. We're gonna do introductions so you guys can formally meet me. We're gonna cover what your tax responsibilities are as an entrepreneur, how you claim income, expenses and deductions, getting and staying organized, and then we're gonna go into deadlines and tax forms, other taxes you may need to pay as an entrepreneur or business owner, and then some tax planning and wrap up. So about me, my name is Pam Balentine. I'm on Instagram as Pam the CPA. I've been working in accounting and auditing for over 10 years. I really, really enjoy the profession. It's not like I hated my corporate job. I worked at one of the biggest accounting firms in the world. I worked at Fortune 500 companies, public universities. I really, really like accounting. And you don't hear that a lot from a lot of people, the fact that they like accounting. I really like it, but what I like more is helping people. So I would see these small businesses fail. I would see my friends who had small businesses fail. And it was mainly because they didn't understand their finances. They didn't manage their money well. We all know that if you can't manage money, making more of it will not help. And if you can't manage your finances as a business, then eventually you cannot sustain or maintain any type of growth that you have. So I really wanted to take my passion for accounting and merge it with my passion for helping people. And that's essentially why I decided to start my business, which is Viking Financial Services. So I hope that helped you guys kind of learn a little bit about me. I really love what I do, and I love helping people. So I just merged those two together. So here, and these are the slides from the live webinar, so some of them may not make sense, but I just had them really think about, what are your tax concerns? What are some tax questions that at the top of your head, when you hear the word business taxes, what comes to mind? What are your concerns? What do you have struggles with? And my hope is that by the end of this webinar, we will definitely address a lot of those questions and concerns, if not all of them. But it is kind of different. Tax is special to each individual business. So, I'll do stuff at a high level, and that's kind of why I asked what type of businesses you had, so we can kind of streamline them and pinpoint things for your business. So, if you have some paper and a pen next to you, jot down a couple tax questions and concerns that come to mind, cross them off as we discuss them. And if we don't discuss them, then definitely we will cover them during the Q&A session. So your tax responsibilities. When you become a business owner, you get a whole new level of responsibility. I don't know if you guys are working full-time and doing your business as a side hustle, or if you are a full-time entrepreneur, but When I was in corporate America, I really didn't think about taxes. It didn't concern me because it was automatically taken out of my check on your W-2. So you really didn't care. It didn't matter to you. It was automatically handled. But when you become an entrepreneur, that is no longer the case. The burden of tax lies on the business owner. So when you become a business owner, that level of responsibility magnifies tremendously. So regardless if you hire a CPA, an accountant, or a tax preparer to file your taxes, the information that is submitted is ultimately your responsibility. So it's really important to know your business, know your numbers, and not just at tax time. And we'll talk about this a little bit later, but having those financial statements to kind of understand what's happening in your business and your finances, understand what type of tax responsibilities and liabilities you have is really, really important. And so that's why I'm really happy that you guys are on the webinar tonight and taking this seriously, because a lot of people don't. And I'm not one to play with the IRS or any type of government. So let's just do it right, get it over with, and move on, right? So claiming income. I just mentioned, as a self-employed or business owner, you have to claim your income to pay your taxes. You're not getting paid on a W-2. Those taxes aren't automatically coming out. So it's your responsibility to track and report your income. So that means you have to keep good records and you have to be honest. A lot of tax evasion comes from people who aren't honest or really claim 100% of their taxes. Of course, it's not always easy for the IRS to track it, but why even challenge it? Just go ahead and claim everything that you made, pay taxes on it, and get it over with. So I listed a couple ways that you can get paid. Just think about it for your business. Did you get paid all through check, cash, credit card? Did you have some sort of merchant processing system like PayPal, Shopify, Square Cash, Moon Clerk? It's so many of them out there, but really just think about, how did I get paid? Am I tracking all of this income the way that I should be tracking it? I know it's really easy if you're getting paid cash to not track that income. I know that that's easy to do. I know that, that whole under the table concept comes to mind, but you really want to make sure, even just for your businesses, forget taxes. For your businesses, you want to make sure you know what kind of money you're earning. That way you can see if you're growing or if one item is performing higher or lower than the other one. So it's really important to track all of your income for those reasons alone, regardless of taxes. But then when it comes to tax time, you'll have that information readily available. So one main thing that a lot of business owners or freelancers will receive is what's called a Form 1099 miscellaneous. And this is if a company or someone hired you on contract and you get paid a 1099. So let's say if you're a freelance writer and you work for a business doing some contract writing, you will get paid a 1099. A 1099 form is required if you make over $600 from that contract. And even though there is a dollar amount on there, some businesses will submit that form regardless of whatever amount of money you made. So say you are a videographer or something and a big production company hires you, then they will more than likely issue you a 1099 at the end of the year to say, we paid you this amount of money for the whole year. Once they issue you that, you have to claim that on your income taxes. Not only do they issue you the Form 1099, they also issue it to the IRS. I had a client one time who forgot, we'll just say she forgot to submit a couple 1099s to her tax preparer. This is before she came to me. And the IRS caught it because they get a copy of that 1099 too. So it's really important, if you get a 1099 form, to go ahead and include that on your income. If you do not get a 1099 from some clients, go ahead and still include that amount on your income, because it is money that you make, and it's really important as a business owner to track that and to claim that for taxes. So here's an example of a Form 1099. It kind of looks similar to a W-2 form for those of you who have been in corporate or had a W-2 job. The main exception is there's no taxes taken out of 1099s. There are ways you can elect for that to happen, but more likely than not, you see box 7 there kind of in the middle. That's where the non-employee compensation is, and that's all the money that you've earned for the year. There are no taxes taken out of that. Therefore, you have to pay taxes on it. We all know that any money that we get, the IRS, the government wants that to be taxed. 1099 is taxed, but not gradually as you're making the money as if it was on a Form W-2 if you were working in corporate America or retail or anywhere like that. So 1099s are important to track because you will have to pay taxes on it at the end of the year. The IRS gets a copy of this. You get a copy of this. There's no getting around it. So here's a little exercise that I want you guys to do, not tonight if it's too late for you, but soon. If you haven't done so already, determine how much income you've made in your business in 2016. And I put a little hint here. You should have an income statement or a profit and loss report to easily complete this exercise. A lot of people don't have those financial statements in their business. It's really important to have that. So like I said, at the end of the year, when it's tax time, you're not scrambling, trying to figure out, oh, how much did I make? How many expenses do I have? And trying to figure all that out. If you have your monthly income statement reports done, you're ready for tax season at the end of the year. So if you don't already have that established in your business, that is one thing that I really stress to every business owner, regardless if you become my client or not. You have to have financial statements, and they should be 100% accurate. And so if you guys don't have that income statement, go ahead and do this exercise as soon as possible. Kind of compute how much money you've made for the year by month. Oops, I spelled December wrong. Don't you guys hate when you find typos? I looked at this slide deck so many times, and y'all probably wouldn't have noticed it if I didn't point it out. But anyway, go ahead and go through this exercise and make sure you account for how much money you made in your business. And it's really important too, just so you can see the growth and the potential of your business as well. So we're going to talk about expenses and deductions next. To be deductible, a business expense must be both ordinary and necessary. You guys know when you go into business, you kind of get excited because you have all these write-offs, which is true and which is good. A lot of people go into business, home-based businesses, simply for the deductions. But if you have a larger business, it gets a little bit more time-consuming to track these. So make sure that you can prove that your expenses are ordinary and necessary. And by ordinary, it means that it's very common and acceptable in your trade of business. So I think we had a bakery on here. If you're buying flour and if you're buying milk and eggs, those are ordinary expenses. For any type of business, if you're doing marketing, and we'll get into a couple examples in a minute, but all those things are ordinary in your business. Another thing is it has to be necessary for your business. So it's helpful and it's appropriate. You cannot continue on with your business if you don't spend this amount of money. So for me, I do taxes, I do accounting and bookkeeping. I have to buy a tax software. That's simply necessary for your business. I see somebody raise their hand. I don't know how to check on that. Go ahead and type something in the Q&A box or the chat box for who just raised their hand, and we'll get to that as soon as possible. So yeah, you have to think of something that's necessary for your business. Me, I have to have software that's necessary for me. So, business deductions will vary across industries. So it's really important to have a relationship with your tax preparer, your CPA, your accountant, whoever you hire to do this type of work. You should have a relationship with them. They should ask you a ton of questions on how your business operates so they can figure out which deductions definitely work for your business, what you need to maximize your return. The last bullet point on here, and I cannot stress this enough, is you do not deduct personal expenses. And as a business owner, I definitely understand how there's a fine line between what's for personal, what's for business. One main tip that I have for you is to make sure that you have a business checking account. If you separate your funds, it will be easier for you to decipher between what is personal and what is business. Anything that's business, you pay only on that business account. If it's personal, you use your own personal money. If you find that you keep borrowing money or swiping your business card for your personal expenses, mainly it's because you're not paying yourself enough on salary, or you're just not managing your personal money well enough. So you just want to make sure that you do not commingle funds. This is not only detrimental for your business, but there are also legal ramifications if you do that. So I cannot stress enough, do not deduct personal expenses. I know this is where a lot of the celebrities get caught up in. They say, oh, I bought this private jet to to fly to Hawaii for work, but it's really not for work. It's for personal. And then the IRS gets wind of that. They go back, do an audit. They realize you didn't film anything when you were in Hawaii. You were there just laying on the beach. That's a personal expense. That's not a business deduction. Now they end up on $15 million. And that's an exaggeration, using a celebrity or something as an example, but that can really happen. So do not deduct personal expenses. Do not commingle business and personal funds. And if your CPA really cares about you and your business and they see that happening, they'll let you know. I let my clients know all the time. They get so angry at me. I'm like, you are using your business account for personal money. And that's just because I care. I don't want to see anything happen. I want to see their business continue to grow. So I cannot stress that enough. You'll see it all on my Instagram, in my Periscopes, everywhere. Do not commingle funds. So here's a list of common business expenses and tax deductions. Of course, this is not a complete list. This is not all encompassing of whatever type of business that you have, but these are a couple main and common examples that I can think of that could be across any type of business. So, you have your rent, your business use of home. If you have an office in your house, and we're going to talk about that in a few, but you can deduct that. Your mileage and auto expense, definitely. We'll talk about that a little bit more in detail. Meals and entertainment, that can get iffy because I see a lot of people give me a receipt for $7 at Chick-fil-A and want to write that off for their business. And I'm like, well, who did you meet with there? What did you guys talk about? And they like, no, I just stopped and got some food. It doesn't work like that for meals and entertainment. First of all, I do want to mention meals and entertainment is only a 50% deduction anyway, according to the IRS, because you're going to eat anyway, right? You're going to go out and go to these concerts and theaters or whatever you're inviting your employees or customers to. You're going to enjoy that. Half of that is enjoyment. It's not all business. So first of all, you only get 50% deduction for those things. Second, it has to be a valid business reason. You have to talk about business. It has to be with a client, potential client, investor, employees, business partner, anything like that. If you're traveling and you're out on the road, things that have a valid business reason. So please keep that in mind when you're doing meals and entertainment and you're collecting your receipts and things of that nature. I've had some people give me their grocery store bill and saying I bought groceries for the house. I'm like, that's not business. That does not count. So, just keep that in mind. If you paid any taxes, you can deduct those. A lot of people tend to forget that. If you pay state taxes, that's deductible. Insurance, if you have your personal health life insurance that you pay on, that's deductible as well. Office supplies. A lot of people tend to overlook this. Office supplies are a huge deduction. Business owners, we buy so many ink pens and paper and ink and staplers, and it becomes second nature. Oh, I need to go grab this, that we don't even think of it. Oh, this is a business write-off. Or maybe we do think of it and then we forget to account for it later. So office supplies is one that I see a lot of people tend to overlook. Employee and contractor payments. So if you hire a contractor, maybe you have a graphic designer or someone like that you have on retainer, then you may issue them a 1099 like we talked about before. Those payments are deductible. Or if you have employees and you're giving them a wage or a salary, that's deductible as well. Commissions, if you're paying out commissions, if you have a referral program and you're paying out affiliate fees, commissions, referral fees, that's all deductible as well. Professional fees, so if you hire, like I said, a graphic designer, a web designer, a lawyer, a CPA, all of those fees are deductible. If you had a training coach, a sales coach, a business coach, anything like that, you can definitely deduct those fees. Advertising and marketing material, that's really expensive to get logos and business cards and flyers and everything like that made up. If you do Facebook ads, commercials, anything like that, that stuff is totally deductible. You want to make sure that you account for those, you think of those, you accumulate all the receipts, and we'll get to some methods on how you can organize these things in a few. So this is for the business use of home. This is a quick slide that I put together because a lot of people tend to overlook this. If you have an office space in your home or you're in an apartment, and by office space, I do not mean a dining room with a desk in it where you usually eat, sometimes you work, probably just throw the mail on that table and keep it moving. But an office space is where you do your work. You may see some clients there, you may not because it's your home, I get that. But if you do 100% of your business operations there, if it's not used for any other purpose, so it's not a guest room, it's not a dining room, it's sectioned off properly, then you can deduct some money. You can get some money back for that. So there's two methods. There's the standard method and the simple method, which is fairly new. The IRS launched that a few years ago. For the standard method, what you would do is you would take the square footage of your office space, divide it by the square foot of the total home, and that'll give you a percent. And I should have put an example in here, probably would have made it a little bit more clear. But let's say that your office space was 300 square feet and your house was 1,500 square feet. That gives you a 20% rate. What you would do, you would gather all of your rent and mortgage statements, your utility bills, so your internet, your lights, things of that nature, and you would multiply all of that by 20%. A lot of people don't realize that they can do that, or maybe they just realize, oh, I can deduct a portion of my rent or mortgage, and then they stop there. However, that room is heated, that room has lights, that room has internet, so all of that is necessary to run your business from that room. So your utilities, you can also use that percentage to calculate that for a deduction on your taxes. So let's just say with that 20%, if your rent was $1,200, that's $240 per month, and that'll give you like I don't know, I guess I should have did some math there, $2,880,000 deduction just on rent alone. Not to mention you have your utilities, your cable, and internet, which are overpriced and expensive anyway. You can deduct that at the 20% as well. So there's also the simple method. And that was something that the IRS launched. And, you know, a lot of people didn't want to go through calculating the rent and their mortgage and the square foot of this room, square foot of the house. A lot of people didn't want to do that. So the IRS launched what is called the simple method, and it's just a flat rate of $5 per square foot. So you don't have to go through the calculation. You just use that $5 per square foot. So if you're, we can use the other example. If it's 200 square feet for the office and you do it for $5, that's an $1,000 deduction. The caveat here is there's a maximum of 300 square feet that you can deduct. And that only gives you a maximum deduction of $1,500. And in the standard method example we just used, rent alone was almost $3,000. So, excuse me, depending on your organization, the time that you have, or if you even care to get that huge deduction, it may be more beneficial to do the standard method. It may not. It really just depends on how big your home and your office space is. If the simple method gives you more, do that. If the standard method does more, do that. I know I had a client come to me and she was using the simple method. And I'm like, let's just take a couple, days to gather all the information that we need so we can do the standard method. And she was able to deduct over $3,000 more than what she was doing for the simple method. So depending on the space, it may be beneficial to do that. The next topic is the business use of automobile. There are two methods to this as well. You can either do standard mileage or you can do actual expenses. For the standard mileage, it must be for business travel. You can't say, oh, I'm driving to, I don't know where you guys are, but if I'm in Atlanta and I'm driving to Houston to go to the Super Bowl, which I may think about doing, that's not for a business expense. So I can't write off that mileage, right? But if I'm going 30 minutes away to meet a client, then that's business travel. I can deduct the mileage for that. And the IRS requires you to keep a mileage log. You can see all the points there, which should be in your log. So it should be the date, the starting point where you started at, your destination, the purpose of the trip, your vehicle starting mileage, vehicle's ending mileage, and any tolls or other expenses. I know a lot of people don't do the vehicle starting mileage and ending mileage because they forget to look at the odometer and write all that stuff down. But I feel like if you have a valid business reason for the trip, where you went, what the date was, who you met with, and you can align it with your calendar appointments, then that would be sufficient. If you are diligent enough to look at your odometer, more power to you. You can do that as well. I know there are apps out. There's that Mileage IQ app, and that tracks everything for you. It drains your battery on your phone, and it gets irritating after each time you drive. You really have to log if it was for business or personal. But if you have a lot of mileage for your business, it may be worth it to getting an app like that. So that's the mileage. It's 54 cents per mile. It went down again, but that's still a lot of money if you drive a lot for your business. And then the second method is actual expenses, and you have to determine the percentage of business miles versus personal miles on your car. And you could use that percentage, kind of like we did in the home office. You use that percentage and you deduct, your maintenance, repairs, gas, oil change, tires, anything like that. You can use the percentage of business versus personal miles on your car and deduct those actual expenses. So whichever method will give you the largest deduction, I recommend doing that. The mileage will save you from keeping all those gas receipts, but if that works for you, then do that. So after talking all about that, think of some business expenses you may have been overlooking in your business. I know when I did the live tax clinic in Atlanta this past weekend, there were maybe two or three people who weren't even doing the office expense. So the home office deduction, they totally overlooked that. They had no idea about that. So that's something that they wrote down here. What are some other business expenses you may have been overlooking? How much money do you think you've been missing out on? There's so many deductions out there for your business, so many ordinary and necessary expenses to run a business that sometimes we forget about them, or sometimes we overlook them, or sometimes we don't even think, oh, that's something that I can write off, and it really is. So just think about what are some business expenses you may have been overlooking. If there's something we didn't just talk about and you're kind of going back and forth in your head, like, can I write that off? Can I not write that off? Go ahead and write that down as well. And we can talk about that at the end of the webinar. Getting and staying organized. Receipts are audit protection. In the very rare case that you get audited, because audits, I mean, they do happen, do not get me wrong, but they're very rare. And it may or may not happen to you. But in the rare case that you get audited, receipts are audit protection. And keeping them organized should be at the top of your priority, which I know for certain is just not in a lot of business owners. And even me being a CPA, I had to start practicing what I preach, because I would tell all my clients, get organized, and I was a mess. So I started doing a lot better, and now I encourage all of my clients, friends, business owners, people who not even my clients, to stay organized, because it will really help them not only with their business, but in the very rare case that you get audited, they're going to ask for receipts, and it's important to keep them at least 7 years. And so if you're working with a tax preparer or a CPA and you just pass them all your receipts and you don't want anything to do with them, you don't want to see them, you don't want to log them, then just ask that person, will you be keeping my receipts for 7 years? Because that is what is required by the law. So in the case that you get audited, they can go back and say, hey, give me your 2011 receipts for this line item. And you're going to be like, I don't have that, but you should. So how to get organized? You just gather all your business receipts, categorize and label them. So if it's an advertising, right on the top, I bought business cards. Or if it was a meal and entertainment, then say, I met with John and we talked about the proposal for the next year or the budget for the next year. You just want to make sure that you have the receipt with what it is, what was the business reason, who you met with, and keep that in an expense log. If you don't already have one, you should think about getting an expense log so you can log all of these things and you don't have to worry about it. One thing that I suggest is maybe having a money date at least once a week. And so you don't have to wait till the end of the year to get organized. You can do this organization method once a month. So even once a month, you may have about 50 receipts that you need to label, categorize, and organize. So it'll help you versus at the end of the year. Now it's tax season. You got to go back to March 2016 to find a receipt, which can be very, very, very difficult, if at all possible. So make sure you keep your receipts. They are audit protection. And my corporate job, I was an auditor, and I really believed people when they told me that they did something, but if they couldn't prove it, you didn't do it, in my opinion. So, it's just having that burden of proof and having that evidence that proves that you really did do something. And it's not like the auditors are saying, no, you didn't spend that money. They can see it on your bank statement that you spend it, but it's just like, I just need the proof. Like if it's not documented, it didn't happen. That's the auditor's favorite line. I can guarantee you that. It's not documented, it didn't happen. So just make sure you have those receipts. So some general tips and systems that you can use to organize your receipts. We kind of already talked about having an expense log. One thing that someone suggested to me actually is that they have separate folders pre-labeled with their expense category. So they may have 12 folders or envelopes. One's labeled rent, one's labeled advertising, one's labeled meals, one's labeled office supplies, so on and so on. And they just drop the receipts in there. It's not the most organized system, but it's still better than what I've seen a lot of people do, like coming to me with a shoebox full of receipts and I can't make any rhyme or reason out of it. At least they have it sectioned off by category, so it's easier to kind of calculate. You can use systems to keep you organized. So like QuickBooks or Neat Receipt. I love QuickBooks. If you do data entry or if you log all your income and expenses in QuickBooks, prints you out a nice, pretty report. If you use Neat Receipt, I really like that as well because you can scan it in and save the receipt to the cloud, because we know receipts start to fade. You can't see anything. They get crumbly. And with Neat Receipt, you don't have that issue. So, and then also mint.com. Someone suggested that to me as well. We know mint.com to be a good budgeting tool for our personal accounts, but if you have a business checking account, why not log it to mint.com? Because then it'll give you the categories of you spent this much on food and you spent this much at Office Depot, and it kind of gives you the breakdown of that. So I like that. You can kind of also see where you're spending too much money. It gives you a nice pretty pie chart and everything, so you can kind of see where your spending habits are, and that's a good way to kind of keep you organized and give you an expense log at the same time. Lastly, if you don't want to do all that, which I know a lot of people who don't, you can hire a bookkeeper to handle everything for you. I know people just mail me their receipts for the month, like, here. I don't want to do anything with them. I don't want to log them. Here's my receipts. Here's some invoices. Go pay them for me. Keep the receipt and log it. So that's an option as well. So here's that tagline again. If you stay ready, you never have to get ready. You have to figure out a system that works for you. What keeps you organized? Is it that filing approach that I just mentioned with the envelopes, the pre-labeled envelopes, or is it hiring a bookkeeper, or is it having a money date once a month? Whatever works for you, find it and stay consistent. It may work for the first 3 months, and then the rest of the year you're not doing it, and then you just have to scramble again for tax season, and that's not a good look. It's very time consuming, and then to bring in just a ton of receipts to a tax preparer, that can get expensive. Like, I'm going to charge you a lot more if you do that versus giving me an expense log, organized receipts, and things of that nature. You want to make sure it's organized so you can read it, your tax preparer can read it. It'll save you time, it'll save you money. I'm all about saving money. Even though it would be me getting paid or whoever you hire, I still am not an advocate for spending a lot of money. So I want to save you money. That's what I like to do. Save business owners time and money. And staying organized with your receipts and your taxes is one of the best ways to do that. Another way is to generate and review your financial statements on a monthly basis. So if you have an income statement, it's really going to show you all the money you made, all the money you spent. So that ultimately is your expense log already. So just make sure you have that consistency in your business to have an income statement so that you already have these things prepared and you're ready for tax season. So this is a good place to stop. If you guys have any questions on anything that we've talked about so far, go ahead and drop it in the Q&A. We're going to kind of shift gears here. We've talked about income, logging income. We've talked about some deductions and how to stay organized and for the year. So if you have any questions on any of that material, feel free to log them in the Q&A box and we can get to them now. If not, we can continue on. So I'll give you a few seconds to log those questions in. If I don't see anything pop up, then we will just move forward. And hopefully that means I've been doing a great job explaining these things to you and I've answered all the questions that you had so far. Okay, I don't see anything, so we're just going to keep going. Great. Okay, so we're going to start talking about deadlines and tax forms. So the deadline and the tax forms that you file depend on what type of business entity you have. So if you guys can go ahead and go into the chat box and tell me, do you have a sole proprietorship? Do you have a single member LLC, a multi-member LLC, or any type of partnership? Do you have an S Corp or C Corp? Tell me, what type of business entity do you have? Because that will determine what type of forms you have, what your deadlines are. Okay, so single member LLCs, I'm seeing that a lot. Okay. Do we have anything outside of a single member LLC? Because I will spend more time on that since that's who we have here. And then we'll kind of go high level over some of the other entity types. Okay, so single member LLC. So we'll focus on that. And, we'll also review a couple other ones just in case you guys start getting more businesses and doing different types of things. Then you guys can have that knowledge as well. So we'll just focus on single member LLC because that really is one of the most common. So here's a chart to show the deadlines and tax forms. Sole proprietor and single member LLC are essentially the same. They are almost 100% similar. And if you guys don't know, this is getting into some legal things, and I'm not a lawyer. However, a single member LLC pretty much is a sole proprietorship, but you file that LLC paperwork to give yourself legal separation from the business. So if you're a sole proprietor, you have a DBA or doing business as for your name, you're still one and the same with your business. The personal, the business, it's the same. That's how it's seen in court or anything like that. But if you have a single member LLC, you are a separate entity from your business. So although you are a person who owns a business and operates it by yourself, you are an LLC, which is a corporation, limited liability corporation. So you are separate from your business. And that is also another reason why you should not commingle your business and personal expenses, because then they're looking like, oh, she's not separate from her business. Let's sue her and her business. So we don't want that to happen. So if you have a single member LLC and someone decides to sue your business, they can only come after your business assets. But if they see that you are not operating as a separate entity between your personal and your business, they can not only sue your business and come after your business asset, but they can also come after your personal assets as well. So I'm not saying this to scare you or anything. No one may not sue you, but I'm just saying that there are legal ramifications to commingling funds and not having financial statements and, not operating as a business. I just want you guys to be protected. So with all that said, we're going to talk about single member LLC, which is very similar to sole proprietorship. So if you guys have not heard the term flow through entity, a single member LLC is a flow through entity. So any money that you make in your business, you will essentially claim on your personal income tax return. So you guys know that is a Form 1040. If you didn't know, now you do know that that's your individual income tax return. But now that you own a business, and I don't know how long you guys have been in business, so you may know this, you will file what is called a Schedule C. And, that's your profit and loss for business returns. So you would file your Schedule C, or I'm sorry, fill out your Schedule C, and that will be your income and your expenses from your business. Your net profit will then flow to your 1040. So that's why it's called a flow through entity. And you would just file your 1040 as regular. That Schedule C can get a little bit complex depending on what type of business you have, but it all will flow through to your 1040. And the deadline this year for taxes is April 18th. We all know it to be April 15th, but I think that lands on a weekend or a holiday or something like that. So we have until April 18th this year to file our tax returns. So, just to recap that, you still fill out your your Form 1040, but you also have what is called a Schedule C that will flow through to your Form 1040. And you pay your taxes through that. And even if you are married, you will still have the same process. You would do married filing joint, file 1040, but you will still have that Schedule C, which is for your business. If you have a partnership, or if you're thinking about having a partnership, an LLC with multiple members, it's also a flow through entity. But what's different about it is, because it's a partnership, you have to file what's called an information return, which is Form 1065. So that's where you put, partner A gets 50% and partner B gets 50%. You will put all the income and expenses from the business on this information Form 1065. And each individual partner will get a Schedule K1. So they will get their 50% of the income claim. Partner B will get their 50% of the income claim on Form K1. So however many members or partners you have in a business, that's how many K1s will be generated. And you will use that K1 to fill out your 1040. So it's still a flow through entity. It's a few more steps there, but it's ultimately the same. And the same for S Corp. It's also a flow through entity, but you have an information form, Form 1120S. You still get a K1 and you get a Schedule 1040. C Corp's a little bit different, and in the regard that there's no information return. The business pays taxes, and that's on Form 1120. So I got a question here. It says, what if you used your personal funds for business purposes before opening a business check account, but everything was tracked and reported to the best of your ability? That's fine. And that's pretty normal to do that. So you can still claim those expenses that you've had for your personal funds. They're not going to see that, or they're not going to too much care for that commingling, because you were just opening your business. You didn't have a business account. But now that you do, just make sure, that you keep those separately. That's perfectly normal in startup businesses. And I just really like to stress that as soon as a business starts, to open your business account and do everything separate that way. But that's fine. You're fine. Okay. Okay. So that's that for the tax forms. Again, 1040 was Schedule C for all of you on the line that are a single member LLC, and they are due April 18th. Okay. So other types of taxes. So far, we've really only talked about federal and some state income tax filings, which is your Form 1040. That's your federal form. As a business owner, there are several other taxes that you may be subject to pay. So there's quarterly and estimated taxes, sales taxes, and payroll taxes. And of course, there's probably a whole bunch more, but these are the ones that we'll cover today, and we'll cover in high level, because a lot of these vary per state, sometimes per county, especially for sales taxes. That varies per state, sometimes by county. So I don't want to get into that too much, because I know you guys are kind of all over. I think I have outlined what it is in Georgia, which is very similar in Michigan, which is where I'm from. So we'll go over that in high level detail. And if you have more questions, maybe that's something we could talk about offline. But let's talk about estimated and quarterly taxes. So we've already talked about the fact that now that you own your own business, you pay a lot of taxes. You are responsible for paying taxes on your income. We're so used to the W-2s getting paid and the taxes coming out of that, but now that's not the case. And I don't know how far along you guys in your business, but the more money you make, the more taxes you'll probably have to owe at the end of the year, depending on how many deductions you have to kind of offset the income. But no one wants to have a huge tax liability at the end of the year, right? You don't want to be so successful in your business and now all of a sudden, oh, I owe $10,000 at the end of the year because I didn't pay taxes throughout. So that's what quarterly taxes are for. You pay your taxes each quarter based on either what you earned in the prior year or any type of estimate of what your income will be. I don't have this on the slide, but go ahead and write it down. It's Form 1040-ES. That is the form that you will use to pay your quarterly taxes. There's also a worksheet attached to that form so you can figure out how much money should I pay each quarter for these taxes. It can get really difficult if you're a first year or second year business owner and you didn't really make a lot. And then all of a sudden this year you're like, oh my gosh, I think I'm going to grow so much so fast. I don't want to pay a lot of taxes at the end of the year. So, you want to calculate what your estimated taxes will be and pay those accordingly. So if you owe more than $1,000 in taxes at the end of the year, the IRS will pretty much say you should be paying quarterly estimated taxes. If you are a corporation, which I don't think anyone on the line is, but if you are a corporation and you owe more than $500 at the end of the year, you're required to pay estimated taxes. And so they're submitted quarterly based on how much taxes you owed at the end of the year. So now that we're at tax time, if you didn't pay quarterly taxes, don't freak out. It's not a big deal, but your tax preparer this year should let you know based on your return, yes, you should start paying quarterly taxes, and they should be able to tell you how much you should pay. If they don't tell you that, go ahead and ask them. It's okay to say, should I be paying quarterly taxes for my business? Especially if you owe more than $1,000 in taxes this year, it should be an automatic red flag if they don't say that to you. But, my tax software, when I work with businesses that owe money, it'll pretty much give me quarterly coupons to give to my clients and say, here's your quarterly coupons. This is how much you owe each quarter. Make sure you pay that, so hopefully you're working with someone, that will provide you that level of detail as well. Sales tax, and again, it varies by state, sometimes by county. Here it is for Georgia. If you are selling what they call tangible personal property, which pretty much is something you can touch, or certain services, then you are subject to sales tax. So if you sell clothes, shoes, books, or anything like that, that is a tangible personal property that should be subject to sales tax. Here in Georgia, you must register for a sales tax number with the state, sometimes with the county. And what that does is it gives you permission to charge sales tax. Once you charge that sales tax and you collect it from your customer, each month you pay that back to the government. And sometimes it's monthly. Usually sales tax filings are monthly, but depending on how much you pay, you could submit a written request to change the frequency of that. So here in Georgia, if you pay less than $200 a month in sales taxes, you can switch to quarterly filings. And then if you pay less than $50 a month, you can switch to annual filings. But again, we all know that we pay sales tax on items when we go to the store and we buy shoes, or we buy a computer or anything, which is a tangible personal property, anything you can touch and pretty much buy from the store, then you pay sales tax on that. Best Buy doesn't keep that extra percentage. I know in Georgia, it's 8% sales tax. They don't keep that 8%. They have to give that back to the state of Georgia. And that's pretty much what the sales tax filing is doing. It's allowing you to collect sales tax and pay it right back to the government. So if you sell anything tangible, personal property, I think there's a service-based business on here. Your services may not be subject to sales tax, but if you start selling a book, or if you start selling tangible things that people can help you, or that you want to sell to help people get organized. So I think you say you do office and closet organization. If you start buying some office organizers or closet dividers or anything like that with your logo on it, that's something that you're going to want to start looking into, getting that sales tax number and claiming sales tax on that, starting to collect it and pay it to the government. I don't know if you have products yet already, but if you do, that's something you definitely want to talk to your accountant about, getting set up on sales tax. And it's so funny, when I did the tax clinic this past weekend here in Georgia, this lady, she sold books, and she's like, I've been charging sales tax, but I don't have a sales tax number. And I'm like, you may want to get that, because that money's not yours to keep. And you're really not allowed to collect sales tax without that number. And now you're supposed to give that back to the state. So, I talked to her this morning. She's got her sales tax number. She's good to go. She hadn't been selling them that long, so it's really not a big deal. But going forward, now she's compliant with the law. And then there's payroll taxes. So if you have employees, not contractors, they're totally different, contractors and employees. We already talked about 1099. That's how contractors get paid. But if you have employees who you pay on W-2, and they work in your business, like they are your employees, there's so many payroll taxes that you have to pay. There's the federal and state income tax, there's the federal unemployment tax, there's a Social Security and Medicare tax. So if you worked in corporate America or any other job that you get paid on your W-2, these are all the taxes that are coming out. So as an employee, you paid some, and as an employer, your employer pays some as well. But now that you own a business and you are the employer now, you have to pay some of these taxes. So the federal and state income tax and the Social Security and Medicare tax, you split that with the employee. So they pay some, you pay some. But the federal unemployment tax, the employer pays that. So keep that in mind as you're hiring employees. This is one area that the IRS kind of raises their eyebrow to, because some people are claiming they have contractors when they're really employees by definition or by the law. So if you don't have a clear distinction between what's a contractor and what's an employee, you may want to reach out to a CPA or an accountant and ask those type of questions, because the IRS is starting to crack down on that. Because essentially, the employers are trying to get out of paying these payroll taxes. Like, of course, no one wants to pay taxes. I totally get that. But if you really have these people in your business and they should be employees, you may want to go ahead and set them up as that, and just bite the bullet and pay these payroll taxes, because the IRS is starting to crack down on these contractors versus employees, and they're starting to make people go back, like backdating to when they hired that person and paying these payroll taxes. So that's something you definitely want to figure out right away. If you have contractors or employees, make sure that you are paying these payroll taxes. The frequency of submitting payroll taxes really much depends on how much you owe. It's either monthly or semi-monthly, which is semi-weekly, which is twice a month. It can get very cumbersome. It really can. It is very difficult. So that's why a lot of people are just saying, oh no, I have contractors. These aren't employees, when by definition they really are. So you want to make sure you talk to someone, get a really good clarification between contractor and employee, and making sure you're submitting the proper taxes. So now we're going to shift gears kind of into tax planning. Some things you want to think about. Filing taxes isn't as cut and dry as it appears. You really have to plan properly to ensure your taxes reflect your goals. And this is what I mean by that. If you are solely an entrepreneur, business owner, operating your business full time, and you don't have a W-2 job, what's the main thing they ask you for when you go buy a car or go buy a house? They ask you for pay stubs, right? And if you are owning your business, you don't have pay stubs. All you have are your tax returns that show your business income. That's it. So I know when you go into business, you don't want to pay taxes. You want to write everything off. I totally get that. That's where I'm at in life as well. But if you go to buy a house and you have all these write-offs on your tax return, so you don't have to so you don't have to pay taxes, you're essentially showing your business at a loss. They're going to look at you like, you can't afford this house. You can't afford this car. You don't make any money, and you're going to get denied. And that's happened so many times. So it's really important to do proper tax planning, to have a relationship with the person that's doing your taxes, so you can say, hey, in the next few years, I'm thinking about buying a house. They're going to say, okay, good. You can't write off everything in your business anymore, because you want to make sure you're showing a very profitable business so you can afford the type of house that you want to buy. So think about it. If your business income was $100,000 and you had $90,000 in expenses that you can prove, you can calculate, and you're so excited, like, wow, you're only showing $10,000 in your business. You're really not going to have to pay any taxes. That's awesome. And you try to go buy a $300,000 house, they're going to look at you like, you only made $10,000 last year. I cannot give you this house. So proper tax planning is very, very, very important. So you have to think about, what are some business goals? What are some personal goals that you want for 2017, so you can start planning properly? Do you want to get investments for your business, buy a house, buy a car, anything like that? Investors are going to look at your prior year's tax returns to kind of gauge how successful your business is. So that's one thing you definitely want to keep in mind. Make sure you have a really good relationship with your tax preparer so you can communicate these types of things, because if you come to me and you say, I don't want to pay taxes, we're going to try to find as many deductions as we can so you don't have to. But if you don't tell me you want to buy a house, we won't know. We're going to try to find you deductions so we can lower your tax liability. But that's really not a good look if you're trying to buy a house and this is your only source of income. Or if you are married, you just want to make sure that your joint income is sustainable to afford that house, or it appears that it's sustainable. Because we all know that perception is not reality. Your business can be booming, but you can find those deductions to write off for taxes, right? You could have made so much more money than what it shows on taxes. And it's not a scam. It's not illegal. It's the way it goes. But you just want to make sure that you are planning properly for your goals. So here's a few thought starters when you're doing tax planning. If you want your business to grow, more money, more problems, right? The more money you have, the higher tax bracket you fall into. So you're going to be paying more taxes on that. If you are expanding your business, which means you may have to start hiring employees, there's more taxes to pay. Those are those payroll taxes that we just talked about. So these are a lot of things that you really want to sit down and talk to your accountant, CPA, tax preparer about. I want everyone's business to grow. I don't want it to stop just because you have to pay taxes on that, but you definitely do need to plan accordingly. Personal goals can be affected by your business tax return, kind of like we just mentioned about the example of buying a house. And then claiming expenses can show a less profitable business. So that example that I gave, you made $100,000, but you somehow find a way to find and claim $90,000 in expenses. that can show a less profitable business. So depending on what you want to do in life, that may not be a good idea. So it's really important to start aligning your finances with the goals of your business and your personal as well. So that brings us to the Q&A session of the webinar. So I really hope that whatever questions and concerns you had, that first slide that I brought up, we kind of covered those throughout the webinar. If not, we have about 24 more minutes left in the time frame to do Q&A. So if you have any questions, feel free to drop them in the Q&A box. Or even if you just have some feedback that you want to share, was it helpful to you? Were your questions answered? Did it make sense? I try not to use a lot of accounting jargon as much as possible because it can get difficult when trying to explain taxes. So, if you guys have any questions, now is the time to do so. Please make sure you stay on. I do have an awesome offer for everyone that joined the webinar. I don't want you to miss out. So if you have any questions, let's go in the chat box. Let's see. You guys have no questions. That kind of makes me think I did a really good job. Kind of makes me happy. No questions? We may be able to get off pretty early. Is QuickBooks the best software for small business? I'm not going to say it's the best. I like QuickBooks. Like, I use QuickBooks. That's the software that I use, but there are so many others that are coming out. I don't even want to start naming them. In so many, Wave, Zero, so many other ones. I will say QuickBooks is the best recommended because so many other things link to QuickBooks, and a lot of things are so new that they aren't linked yet. So, all the banks, all the credit cards, Shopify, Square, things like that link to QuickBooks, and a lot of other things like your payroll, your 1099, all of those take QuickBooks files because it is probably number one in the industry. But whatever works best for you is easier for you to use, I would go with that. But I really do like QuickBooks. It's my preference. I'm actually studying to get certified in QuickBooks as well as an accountant. So that's probably why I like it so much, because I've been using QuickBooks for a long time. And it's really user friendly, it's easy, and their customer service is great. So even if you use it, maybe not your accountant, and you have questions, their customer service is great as well. Good question. So even if it's not tax related, if you guys have any questions, feel free to ask them now. Probably wait about 30 seconds. How do I pay myself if this is my only income? Good question. I should have talked about that a little bit more. So if your business is your only income, it is definitely okay to pay yourself. Actually, I recommend it. The best way to go about it is just figure out how much money, or figure out if you want a set dollar amount to pay yourself or a percentage of the business income. So, sit down, figure out what your personal monthly expenses are, give yourself a little cushion if you like, and then maybe per month, pay yourself that amount. So just take it from your business bank account, put it in your personal bank account. And then the way that you log that on QuickBooks is an owner's drawing or contribution. Or if you want to take a certain percentage of what the business makes. So if you want to take, I don't know, I'm just throwing numbers out there. I don't know what works best for you, but if you want to take 50% of whatever the business makes that month, that's fine too. So just take that money out, put it in your personal, and that's fine. That's nothing you would write off on taxes though, because it's still all gonna kind of flow through. But that's how you do that. Does that make sense? I definitely recommend paying yourself. A lot of people don't do that, and that's why they get caught up in swiping their business card for personal expenses because they don't pay themselves. Paying yourself, I mean, you do a lot of work. Why wouldn't you want to pay yourself? Right? A lot of business owners don't. So I hope that answered your question and that made sense. Okay, so are there any other questions? If not, I can go to the next slide and show you guys these amazing offers. So I decided to do some tax upgrade packages because I really appreciate everyone who took the time to join this tax clinic webinar. And I'm sorry I didn't think about it before. I know I was advertising the Atlanta event, and everybody was like, "Are you gonna do a webinar?" Yes, I decided to do a webinar, and just for the people on the webinar, we have a couple tax upgrade packages. So if you want a lifetime access to this recording, you can click this link and buy that. If you want business guides, like I have an expense log, a mileage log, a budget for your business that you can start filling out. I've got some ebooks on taxes and some guides that are awesome that you can start implementing today for your business. Then you can go to this bit.ly/tax upgrade and get those right away. But what the best offer is this $3.99 tax special, and it's solely for the people who attended the tax clinic. It's valued over $850, and what it is, you get your business tax returns filed for your federal and your state. Then you get all those business e-guides, worksheets, and a 30-minute money and tax strategy call with me. And this is really valued way more than $850. But for anyone who attended the tax clinic, it's only $399. This is only valid for a couple days. So it's until the 25th. All you have to do is go to that bit.ly tax upgrade and buy it now. So even if you aren't ready to get your taxes filed, I know we went over a couple ways to get organized. If you're not there yet, that's fine, but you want to make sure you log into this bit.ly link and make sure that you purchase this today or tomorrow, because it will go up on Wednesday. And it can get expensive as a business to file taxes. So I think that this is an awesome deal. And I just want to make sure that I give you guys a lot of value, a lot of knowledge, so then you can continue to grow your businesses. So head on over to that bit.ly tax upgrade and purchase that today. So if you guys don't have any other questions, I think that we can call it a night. So again, thank you guys so much for joining the tax clinic, for participating. I really, really hope that you got a lot of information from it. You learned a lot. All your questions got answered, and now you aren't as stressed about filing taxes for your business. Hopefully that this eased your mind and got you prepared. Oh, somebody's chatting. I want to make sure I get that before we log off. Oh, okay, great. Thank you so much, Erica. I'm glad you enjoyed it. And again, Wednesday, the prices will go back to normal for the tax special. So you make sure you head on over there and get that, and you get a replay or lifetime access to this webinar, some other guides and worksheets, which I think will be very beneficial for your business. So again, thank you guys so much. I really appreciate you joining me, and I'll see you soon. Oh, I'm sorry. No, the special is not only in Georgia. I do taxes in all 50 states. So, yep, and it'll be federal because Texas doesn't have state taxes, right? Yep. So it'll be the same price. So thank you guys so much. Please be sure to follow me on Instagram, Pam the CPA. If you have any questions, you can just DM me there. Have a good night.